It's Sunday the 20th. Thank you for joining me. I'm going to run through what happened in the markets last week and some ideas for what might happen this week, starting with my favorite gold. I identified this bull flag pattern, which I said would be a buy signal if we broke above the upper trend line. And then the target for last week was 27.15. I made a video of it. I'm sure you watched it. The breakout was tricky and it did fool me. And of course, this is just the way breakout trades work. It was unfortunate. There is the upper trend line. Now, it was a messy break. This is the 4-hour chart. We had several candles close above it. It looked pretty good. We actually closed the end of last week above the upper trend line. I took this as a buy signal and I said on Monday, we should be getting into gold. Anyway, we'd had this really unfortunate candle, which took the market down to 26.38. That was about 2 points below my stop loss. Now, I know some of my subscribers got stopped out. I'll be honest, I got stopped out. And it was frustrating because then the market took off. And you can see here how the following two candles held the 100 moving average on the 4-hour chart. Actually, we dipped to the 50 moving average on the 4-hour chart. That was what caught the downside and the market took off. And I thought we'd hold above the trend line and the blue 100 moving average. And it was so unfortunate because it was just this little candle here that burst through. That's the way the trading goes. I know some of you just jump back into the trade. And we did take off and eventually we did hit the target. So it worked really nice. But we did also get a second opportunity to jump into the trade. That was on the break above this area right here. The previous all-time high, 26.85. I said, if we break above 26.90, that's going to be my buy signal for the week. We did do that with this green candle here. Got up to 26.96. We pulled back to 26.88. Now, actually, if you're following me on Telegram, I said if we pull back to the 26.87, 26.82 area, that will be a really good buy area to add to longs. And that did actually work really, really well. And if we look at the hourly chart here, this is where we pulled back. We broke up above 26.90. We got to 26.96. That was when I put a message in the Telegram group. Buy if we dip back down to 26.87, 26.82. We got down to 26.84. That was a gift. So sometimes the pullbacks really work for me. Sometimes they don't. We jumped in here right at the low and then bang, straight up to 27.15. You can see that on the hourly chart there. Okay, going back to the 4-hour chart now. So we have hit some trend line resistance. This is why you need to keep your trend lines on your chart for a long period of time. You might think that the trend line's failed, but then look, we're coming up to test this trend line. Now this trend line goes back to the beginning of August. So there is a little bit of resistance. It certainly has held this move so far. Maybe we'll get a retreat. Maybe we'll pull back to that 26.87, 26.82 area, and we could try longs there again. I've put Bollinger Bands on my 4-hour chart. I don't normally have it on there. It's not actually any use for gold because gold's in a trend, but I'll put it on there because there's so many Forex markets that are moving sideways. I've only put it on the 4-hour chart. I haven't put it on any other time frames. I'm going to see if it works for these sideways rangy Forex markets, which are driving me mental. But anyway, so that's my look for gold. Gold should continue higher, but the pattern for gold recently has been for it to push higher and very quickly find a consolidation, form a pattern, just like it did here with the bull flag. So I wouldn't be surprised if gold does start to consolidate, maybe even pull back to the buy area. Anyway, I will do my analysis for my subscribers and I will post that for you later today. I'll give you all my trade levels, of course. Silver is actually getting interesting at last. Horrible consolidation. I really ran out of trade ideas with silver and it was the right thing to do to just leave it alone. But now silver's broken up above the 2024 high. We are motoring. I have to assume that this is a buy signal for silver and that maybe we've started a bull run. Maybe silver can try to catch up with gold now because it really has been lagging behind. When you look at it here on the right-hand side, you can see silver has actually been in a really good bull run, but how easy would it have been to hold a long position through this? Not very easy. Very long periods of time when we're just going sideways, a deep pullback here. I think most silver bulls would have just given up. I certainly would have done. I'm going to go and have a look at the monthly chart now and see what's going on. Now you can see that we are nowhere near the all-time high of 49.51. We're at 33.65 after the breakup on Friday. So we could have a good run in silver. I think you're going to have to buy it and close your eyes and not watch the trade because I think it probably will continue to be quite erratic and random. But you can't deny the trend. The trend has been bullish since actually, what was the low? 2020 was that low. We are actually in a 4.5-year bull trend. It just hasn't really felt like it. $35 is a 61.8% fib. I would imagine we can get there. It's only $1.50 away. Maybe we could get there this week. Interesting one to watch. Okay, on this right-hand side here is the daily chart for crude oil. I'm looking at it because I cover gold, silver, and oil every day for my subscribers. But honestly, this is so confusing. I'm going to show you some reasons why I'm not going to trade oil at the moment. So clearly in something of a sideways pattern, we broke to the downside. We had this trend line going back to 2023, early 2023. We broke down. It looked very negative. It looked like oil was going to collapse, but it wasn't the case. Middle East tensions pushed oil straight back up. There's clearly no pattern. There's clearly no trend. It's only going sideways. We're trading we're trading at the same level we were trading at the end of 23 and at the beginning 23. We have obviously been all over the place ever since, but we're still within the range. The trend lines are doing nothing. The moving averages tell the whole story. This is key. The black line is 50, the blue is 100, the red is 200 day, the green is the 500 day. They've all converged, so there's clearly no trend on the daily chart. The green 500 is almost touching the red 200. The blue is just waving up and down above and below the 200, so clearly no trend there. Even the moving averages are erratic and all over the place, giving us no guide whatsoever. When I see this on the moving averages, I just back off. Unless there is a pattern for me to trade, there is no trend. It's just erratic. And unfortunately, in oil, there's just no point in me trying to identify trade opportunities. So let's focus on where we can find tradable trends. And the pound versus the dollar cable. Well, yes, we are in a bull trend. Again, very difficult to trade. Extremely deep pullbacks. Long periods of time when the market is trading sideways quite randomly. Again, look at the moving averages here through the beginning of 2024, trading sideways, flatlining and converging, which is normal in the sideways trend. But we do have a breakout. Now, again, this hasn't been easy, but you can see the price bounced off the blue 100 and the red 200-day moving averages and accelerating. Now, look, I'm going to actually show you this on the weekly chart. We have a really important longer-term trend line. If you're a subscriber, you already know about this. This goes back 11 years, this trend line. On the weekly chart, we broke above it and I got extremely excited and extremely positive. I thought this is a longer term trading opportunity. We've got to buy cable. Now we've had a deep pullback. This was triggered by weaker than expected inflation numbers in the UK. We're talking about rate cuts in the UK now. So the market has pulled back, but we have found some support. I had a buy level at 130.00 down to 129.80 last week, and the low was 129.71. So we caught the long trade. We've had a good bounce. If you're still holding the position, I think we have got some legs on this. I think we can continue to push higher. This is just characteristic of this trend. It pushes higher, has a deep pullback, but eventually it hits support and then it takes off again. So I think we could be about to see it take off. We've got a doji there on the weekly chart, which indicates a balance between buyers and sellers. And that's actually what we want. If we're looking for the market to turn around and reverse, it indicates that the buyers are stepping back into the market and they may actually be regaining control. So push above last week's high of 131.00, gets us up to the previous week's high of 131.34. But of course, we've got to get through this trend line area and the 500-week moving average around 131.60. That would release cable to have another decent run back up, retest that previous high around 134.34. Then if we can break above there, we're going to start building on that bull trend. This is an interesting pattern in the dollar yen, sticking with the dollar pairs. This could be a head and shoulders pattern. Nice, clear left shoulder, nice, clear head. Is this the right shoulder to a pretty large head and shoulders pattern? It's been built up the whole of this year and beyond because this left shoulder started building in July 2023. So this is a real big pattern. If this plays out, this is going to send the dollar yen significantly lower. Could be a huge trading opportunity if we break below the neckline. So that's something I'm watching very carefully over the next few weeks. The euro yen is also building something of a similar pattern, very clear actually. Look, even the red neckline is nice and it is quite flat. So we've got the left shoulder here, again, built over the same period from the end of 2023. The left shoulder potentially, this could be the head and maybe this is the right shoulder. I thought this would be a short shoulder, but maybe not. We're continuing to potentially build that right shoulder for the euro versus the yen. The neckline is in red. It's very clear. It's a long way down the neckline, 154.80 currently the value. So we would have to drop nearly 1,000 pips just to test that trend line. But once we break, we would be looking at a drop of around 2,000 pips. So it definitely is a pattern that we want to watch. Okay, that's it for my analysis for this week. I hope it's helpful. Please do give me your comments. Let me know what you're watching. Let me know if you've got any ideas on the markets that I'm looking at. And of course, please do like, share, and subscribe.